Hello, this is Pat Walker at MissionWinners.com, and I'm doing a video here for Troy, but this is for everybody. And Troy asked a question, and I'm going to read it. By the way, I encourage you folks, please ask questions. I encourage them. I'm not going to lie to you and tell you I'm going to get to it immediately, but I do get to them because it's important. So here you go. Here's the question. It says, "Howdy, Pat. You occasionally mention on the Twitter VIP stream about scanning for potential gap setups near the end of the trading day. I saw today a post showing that you typically look for max list stock closing near the high of the day on good volume. I am interested to know if there are any other parameters you look for in identifying gap candidates. And further, what do you do with gap candidates you find? Do you take a small position or add to an existing position in anticipation of the gap? Do you wait until the next day and enter on the gap, like a watch list candidate flagged, etc.?" And he said, "Thank you for your help." Troy, great question. Great question. So here's what I do. I have found that historically, some of the most reliable stocks for gapping up are the max list stocks. And I put the max list together, I don't know, probably 10 years ago. Long before we ever heard of FANG, I had the max list. And it's the group of institutional stocks that the big money just floods into. You could say, what do you mean by that? If you take a look at the price of Apple, take the closing price of Apple today times the number of shares averaged volume on the stock, you will be dazzled how much. Funds could put in $100 million, $200 million into Apple and not move it. They can also do the same thing and get out of it. Max list stocks. So that's what we look at. So answering your questions, let's go through this. What do you look for? I key on the max list stocks because they are the most consistent stocks for gapping. What do I look for? I look for a fairly good chart pattern. I don't want to just, it's up big and it closes near the high. No, I'm looking for it's bouncing off the 50-day, it's bouncing off the 20-day, it's bouncing off the 8-day. There's a long consolidation zone and it's closing near the highs for the day on heavy volume, big volume. That's what I'm looking for. So I do want some semblance of a pattern that normally means it'll gap up and follow through the next day. What do? This is my tactic. I will buy it that day. If I saw it today, if I found one today that met all the criteria, I buy it today right near the close, like a minute to the close. I will buy some. Do I go big on it? No. This is an aggressive tactic. Aggressive. Does it work? It works more times than it doesn't, let me tell you. I can show you more examples if you want to see them, but it does work. Do yourself a favor. Punch up Amazon 3 days ago, take a look at how it closed, and look at what it did the next day. I think it gapped up 12 frickin' points. There you go. That's what we look for. So, let's say I take this a step further. I focus on the max list stocks. That's primarily where I go. Do you take a small position or add to an existing position? If I own some of it already, I'll buy some in anticipation of a gap up the next day. What I do though on those shares, I will trade around those shares specifically. I have seen more cases where a stock will gap up big, maybe go up a little bit, and then fade. So I will tell you this, on a gap up, I am fairly quick to take off maybe 20% of my shares within 5 to 10 minutes of it gapping up. I'm watching it very closely on the chart when it gaps up to say, is there any fading in it? You can say, why are you so hung up on that? Punch up Lam Research and look, and it was earnings, but look what it did today. Big gap up and it fades. I've seen many cases with max list stocks that can gap up and they'll give it back. So I'm quick to take 20 to 50% of it off on that gap up to know that I've made it. Then, if it falls back down into the previous day's close, which is where I bought it, the odds are very high I will sell the rest of my shares that I bought the day before in anticipation of the gap up. Because here's what I don't want. I don't want to buy something at $50, have it open at $52, and then see it drop all the way back down to $49.50 and I'm still in it. I'm not going to round trip this stuff. Big reason why? This is an aggressive strategy. But does it work? Oh, yes, it works. It works extremely well. So that's exactly how I do it. If I see something that looks great right near the close today, by Jove, at 30 seconds before the close, I'm buying some. Last point, is this a full position? No. If you normally buy, I'll just make up a number. If you normally buy 200 shares of a stock, good Lord, maybe you do 100, 80 to 100. That's it. This is an aggressive strategy. Also, let's talk this. If you do it and the next day it doesn't gap up, we have to watch it very carefully that it doesn't fade hard on us and all of a sudden we're sitting there with a big loss. So we are buying this in anticipation of a gap up. If it doesn't happen the next day, I am very quick to sell some shares off so I don't have a problem. I know I shared a lot with you there, but I do want to be thorough to do your question justice. Thank you, Troy. I appreciate it, and I thank you all for your questions. Please continue asking. Thank you.